Hello, good day, guys. My name is Nick, technical analyst with SuperForex. Today, we shall be looking at the technical analysis on the currency pair Euro USD. And first, we will be talking about fundamentals before we move right down to technicals, which is purely what we're going to be seeing on the chart. Now, we have seen that Euro USD advances to 3-week tops, has the 1.0800, looks at ZEW data, US CPI, and Euro USD has finally pierced the key 1.0800 hurdle, while Germany EMU economic sentiment comes next in the docket. Now, US CPI results are due later in the NA session, while the single currency extends the auspicious start of the new trading week and lifts Euro USD to a fresh 3-week high past the 1.800 figure on Tuesday. Now, Euro USD focused on domestic data US CPI, as Euro USD trades with gains for the second session in a row amidst the broader based optimism in the risk complex and the renewed weakness hitting the buck ahead of the release of the US inflation figures tracked by the CPI later in the NA session. Now, spot gathers that extra steam as investors seem to anticipate another soft US CPI print, which should bolster a Federal Reserve pause at its event on Wednesday versus the largely telegraphed quarter-point increase of the interest rate by the ECB on Thursday. Now, what to expect from this in the Euro docket? Economic sentiment in both Germany and the broader Euroland are due next second by Germany's current account. Now, what to look for around the EUR? As we see that Euro USD manages to surpass the key 1.800 barrier on the back of the persistent selling bias in the US dollar. In the meantime, this PS price action is expected to close mirrorly the behavior of the US dollar and will likely be impacted by any differences in approach between the FED and the ECB with regards to their plans for adjusting interest rates. Now, moving forward, hawkish ECB speak continues to favor further rate hikes, although this view appears to be in contrast to some loss of momentum in economic fundamentals in the region. Key events in the Euro area this week, we have Germany final inflation rate, economic sentiment EMU, Tuesday, and EMU industrial production, Eurogroup meeting, EMU balance of trade, ECB interest rate decision. While ECB Lagarde, ECOFIN meeting, final EMU inflation rate on Friday. And of course, these eminent issues on the back boiler continuation of ECB hiking cycle in June and July, impact of the Russian-Ukraine war on the growth prospects and inflation outlook in the region, a risk of inflation becoming entrenched as well as we can see, of course. Now, Euro USD levels to watch. So far, the pair is gaining 0.3% momentarily at 1.0798 and surpass of 1.0807 monthly high on June 13th. We'll target 1.0878 at a 55-day SMA en route to 1.0904 on the weekly high of May 16th. On the other hand, the next support at 1.0635, checking on our monthly time frame, as the monthly low on May 31st shows that seconded by 1.0516, the low of March 15th, and finally 1.0481 at January 6, 2023. Now, rejection of where our price action might move to, possibly before the end of today. We are looking at a 50 pips interval per price point. And now we are with a breakout of the most recent resistance zone at 1.07986. We are hanking for a much more upper view, but possibly the 1.0862 threshold thereabout. Now, if we were to make an entry at this point and let our trade run up to this point, we're looking at about 132 pips from that entry point, of course, which is good money. And that's our technical analysis on today's currency, Euro USD. Now let's move over to the stock markets. Hello, welcome back, guys. And on today's stock market, we'll be having a look at ExxonMobil. And currently, we can see that ExxonMobil headlining says that a plan to double US shale output in 5 years. Now, ExxonMobil Corporation intends to double its oil production from its US shale properties over 5 years by deploying new technologies, per Reuters report. Now, the company expects some promising new technologies to significantly improve recovery volumes. ExxonM seeks to double recoveries and find technologies that can unlock that, of course. Currently, ExxonMobil recovers about 10% of shale resources from its operations. In 2022, ExxonMobil delayed a target to produce 1 million barrels of oil equivalent per day in the Permian Basin by 2 years due to difficulties that resulted from the coronavirus pandemic. Last December, the company announced plans to produce up to 1 MMBOE in the Permian Basin by 2027, with 9 to 11% production growth expected this year. It also plans for a 5-year technology development program. ExxonMobil seeks to focus on 2 specific areas to improve fracking. The first is to frack more accurately along the well to enable more oil-soaked rock to get drained, of course. Fracking is a method of blasting water, sand, and chemicals on the ground of split rock and keep it open for oil to flow out. Now, though the technology gave rise to US shale boom, only 10% of the oil in the reservoir is recovered using current technologies. Now, ExxonMobil expects better drilling and fracking methods to be pivotal as production growth from shale fields slows, while developing technology in-house will enable the company to better identify acquisition targets. Now, on the price performance of ExxonMobil, we've seen that the shares of ExxonMobil has outperformed the industry in the past 6 months. The stock has gained about 1.8% against the industry 1.5% decline. Now, the open of today's stock market, we should be expecting a pushback to the upside following this recent news. So at this entry point being at 106.58 and let our trade run up to 118.64, we're looking at about 120 pips from that entry point, of course, which is good money. And that's our technical analysis on today's stock market, ExxonMobil. I remain your host, Nick. Bye for now.